The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 10th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, well, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, no problem there. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Just inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 382 points, 24,362 is the print. Don't forget, inside the Dow, the average daily price movement over the last 10 days is 523 points. We're not there yet. I don't even think we got up there. Did we? No, I don't think we got up to 523 points. Maybe today will just be one of those average days. In the S&P 500, she's up 38 points at 2650. NASDAQ 100 up nearly 100 points, 6572. That's about 1.5%. Russell 2000 up 1 7/10%. That's up 25 buckaroonies. The semis are up 2 3/10%. That's $30 to the upside. So all of the indices 1% or higher. The spot VIX index, that's down 3%. We'll take a look at that. That's trading at 2116, well above its 50-day exponential moving average. Gold is up $3. Silver's up a nickel. Light sweet crude up $1.83. Leading the charge here to the upside dollar-wise, we've got Booking Holdings Inc. up $21 or 1%. Amazon up $15, 1%. Tesla $15. BlackRock $15. Intuitive Surgical about 12. Abiomed, something like that. Biomed, probably $11 to the upside, nearly 4%. Nvidia up 4.5% or nearly $10. To the downside, we've got some losers and some schnoozers. SBA Communications down $10. That's nearly 6%. Charter Communications off 6. That's about 2% to the downside. Tupperware. It is painting red lids today, down 11.5%. That's $5.45. Crown Castle, CCI, that's off about $5, and that would be nearly 5% to the downside. Of course, I want to look at what you want to look at. No questions that are on deck, so if you'd like to get your calls in. The phone lines are open. The email lines are open. Even the ping lines inside the Tiger's Den are open. So we're at this stage here where we're kind of like make it or break it. Yeah, I think so. If we take a look at the Dow Equity Futures contract, let's start there. What we can see is you can see this down channel that has been in place ever since those highs. Now, did get created on the highs back in January, but certainly began that first touch point. You like to have 3 touch points out here, and we certainly have them between February 26th, between the March 12th level out here. So we can see the price has been contained in this descending price channel. What we did earlier today, this morning, was price got up and, in essence, tested that trend line. Yeah, right to the T, so to speak, out there. So is it going to break it? Is it going to make it? And I don't know. This is now we are in neutral territory. Yes, it's up against resistance, but it is also above Stevie's red line, 24,032. It's telling you it wants to get off that wall. The question is, will it? And I don't know the answer just yet. But it does look like to me that is a possibility. Up against resistance, so we have to respect that resistance that is in place. If we take a look at the ES Mini for its daily equity futures contract, what we're going to see here is this has a long way to go before it gets up to its resistance level. That would be in about the 2720-ish type area. It'll depend on the day should price continue to move higher. A little bit of a short-term, very, very short descending trend line out here from the high of just a few days ago. So you don't have to pay complete attention to that, but traded above Stevie's red line nonetheless, 26, 29, 37. So it's trying to break out. And speaking of breaking out or break dancing out here, if we just take a look at, just as we did yesterday, the 240-minute chart here for the S&P, we'll pull this chart over, you're going to see that it too is trying to turn the corner. Now, it did this at about 8 o'clock this morning. At 8 a.m., we had, on a 240-minute basis, we had more issues, more constituents, really, right, trading above the top of their 240-minute chart versus those trading below the bottom. As we speak right now, that number is 151 above versus 106 below. Those crossovers, they're bullish crossovers. That's just the 240-minute time frame. The 60-minute time frame, that's in bullish mode. So the two early time frames that we have, or shorter-term time frames, really, is what I should say, they're suggesting that the markets are there should be the energy in place to try to bust out those descending trend lines out there. Now, the daily chart, not there just yet. But, boy, if we do get a crossover, it would be something to pay attention to. There's 95 issues traded above the top of their daily box, 132 below the bottom of their box out here. But that number continues to whittle down. I would imagine inside the ES Mini, we get that daily crossover. You'll see price move up into that 27, 15, 18, 20. We'll see where that descending price channel is if price gets over there. Hey, I mentioned the N. No, I didn't mention the NQ. Well, we should take a look at the NQ out here. As we take a look at it, you can see that actually price is doing two things right now. Right now, and I don't know what the end of the day is going to look like, but right now at 113, the call would go to the bulls, and we think it's all about the NQ. Now, we say that, we make that statement for two reasons out here. One, 65.77 is the number. We're trading at 65.93. That's Stevie's red line on that number that I gave you. There's also a little descending trend line. Yeah, a very steep descending trend line. That price is now above. So you've got two for the price of one. If the NQ closes above Stevie's red line, that's the number, about 65.77, it'll change just a tad or two out there, then it's telling you that the markets are going to move to higher ground. If that level, price closes underneath it, then it's kind of a toss-up out here. We'd have to go back and take a look and say, is it a across-the-board rejection of Stevie's red line? Does the Dow equity futures contract trade or close below 24,036? Does the ES below 26.29? If it does, then that says trouble in River City. We're kind of in this neutral area, but everything is suggesting to you, well, not everything, but many things are suggesting to you the word bottom. Bottoms up. Steve Rhodes with TFNN. I'll be right back. There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 405. S&P is up 40. This next segment is sponsored by none other than Marvin Gaye. It's that What's Going On segment out here. So if we go take a look what's going on inside the summation index, let's go see what's going on inside the advanced decline oscillator readings out here. We're going to see inside the New York Stock Exchange that it is in the hands of the bulls. It's above zero out there. The same can be said for the NASDAQ composite. Inside the Dow, it also is above zero. So you got three of the indices, where we can track that data, that are in the hands of the bulls. If we take a look at the New York Stock Exchange, over on the left-hand side, you can see that price is contending with its descending price channel as well. So the same look there as what you and I took a look at inside of the Dow Equity Futures contract. Here is the Dow Cash Index, and you can see, in essence, price right up against that resistance level as well. Breaking that would then send a message, if it can be done, would then send a message to you that the downtrend is over at the moment. That's right, at the moment. You can always pick up at any point in time, but right now, now, do we have that clear and convincing message right now? We do not. But it's pretty good. It's pretty good at 119 in the afternoon. Now, the weakness out here is in the spot volatility index. It's been a weakness for quite some time. We say it's a weakness because price is still trading above the 50-day exponential moving average. I don't care how you frame it. Trading above that level is never good for the sphincter muscle out there. Not if you're a bull, because that is where the real price damage can occur. That number, by the way, is 1893. We're trading at 2108. However, we have to go do some further investigation out here. And as we go do that, we can see that the spot volatility index traded at 2108. Each of its futures contracts out here, and I mean each and every one, is trading below that. I suggest that that is not logical. Not only is it not logical, there's an error there. And it's not on our screen out here. It says something is going to get batted around and needs to get back into alignment out there. Yeah, trading above every single one of its futures contracts is what we call a bottom signal inside the S&P 500 out there. Yes, we've had a few of them lately, and so this bottom is taking some time to go ahead and form out here. And they'll all be, and at some point in time, that will get back in alignment. But one thing is for certain. And that is that these futures contracts, we're talking April through December right now. April through December. April is straight out at 2041. You've got May at 1952. You've got June at 1913. We go out to December, it's at 1926 out here. So the fear is just it's just a short term. Look, it is a problem, without a doubt, continuing to trade above the 50-day. And if it were trading below the 50-day, one thing would be certain, and that is that what we took a look at with regard to the advanced decline oscillator readings inside the New York Stock Exchange, the Dow and NASDAQ composite, combined with the spot volatility index trading below its 50-day out there. That was pretty quick. Then we would have a unanimous decision that the bulls were in charge. We don't have that as a total unanimous. But what we do have is, because of the spot volatility index trading above all of its futures contract, that is a bottoming signal, not a topping signal. So something to pay attention to. Now, if we go take a look at the bigger picture out here, and that's always good to do, we can begin by taking a look at what's going on inside the Dow Jones Industrials out here. And as we take a look at it, oddly enough, we're going to do that by taking a look at the monthly chart, so that way you and I, we have the big picture out here. We can see that what really appears to be going on, that's what Marvin Gaye is telling you, is that we're just really in a nice big old consolidation. Now, the consolidation that the Dow is in right now just happens to match almost to the penny, but not to the penny, but very close to the penny, the exact size of the consolidation back in 2015. Now, that consolidation lasted for quite a while. But the other thing that we can see that is similar to back in 2015 is that price is contending with its horizontal trading range boundary lines. And on a monthly basis, as long as the Dow closes over 23,934.64 to be exact, but we're not going to be exact out here, as long as price closes over that, it has just as much opportunity. And at this stage of the game, what it's looking like to you is that what the Dow wants to do is trade up into the 25,614 level. May not make it all the way back to its highs. Maybe it does. But right now, just stuck in a trading range, very similar to 2015. If we go take a look at what's going on inside of the NASDAQ 100, because it is really all about the NASDAQ 100. That is the indice of significance as you and I take a look at things. And the reason is because it's the one with the topping pattern. The topping pattern that I will give the exact formula to subscribers tomorrow. And I do mean exact formula, so they can use it for their trade investing for any instrument on any time frame out there in order to be able to call tops and bottoms inside the marketplace. And it's the NASDAQ that has generated that topping signal, the kind that has preceded every bear market, at least in the Dow for the last 130 years. Now, inside of the NASDAQ, when you have any kind of a topping pattern or any kind of a bottoming pattern, you're always looking for levels of support or resistance. In this case here, it is PS, day of resistance, which is at 6350.67. Sort of to be exact out here. And we've seen how that red line has held. And in this case here, the consolidation pattern, which it appears to be in 2018, is the exact same size of the consolidation in 2015. Is there a coincidence here? I don't know. But it does look interesting to me. And inside the NDX, which is the weaker of the indices, weaker because of the topping signal, what it does, what it looks like to me, is it looks pretty strong compared to the Dow, because it's fairly far above that support level of 6350 and change out there. Kind of makes you say, something to think about. Now, inside the NASDAQ 100, a nice bounce out here could easily take you back to about 69.49 out there. And that is what it appears to be trying to accomplish as we speak at 1:25 in the afternoon. It's all going to be about the end of day reading out here. If we go take a look at under the covers inside the NASDAQ 100, take a look at the NQ out here, what do we see? Well, we could pretty much disregard the daily and the weekly charts out here with regard to their TAS market profiles, but we're not going to disregard the 240-minute chart, which is trading with inside its equally distributed box. So we don't know if bulls or bears have control here, but prices held the bottom of that box at 65.37. It's trading right where everybody is comfortable. They're just waiting for everybody, buyers and sellers, to get back from lunch. And once they decide what they're going to do, price either going to go tag 66.54 or 65.37. We're at 65.88 right now. The real number, perhaps, to really be watching is in the 120-minute time frame of its TAS market profiles. And the reason is because that one happens to be a bearish structured box. That's right. You heard it here. That center of the box is at 65.75. That's closer to 66.03 than it is to the bottom at 64.89. It says if we see it close above 66.03, it's not that far above. A close above that, the reading there is bullish. Close above 66.03, 66.54 would be next up. It would be on deck. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
welcome back, folks. Our resident polar bear, David White, he asked if this next segment could be sponsored by Jimmy Webb and the Fifth Dimension out there, because he wanted to hear Up and Away. I believe that's because of some of the positions that he's in out there. I saw a couple of postings inside the den. If I would read them correctly, with an inclination of maybe that's why he's looking at Up and Away. And I'm not sure about that, but I think that's why he wants that song to be played. Well, you're just going to have to stay tuned and listen to his show to find out if that's the case. So I say I'm happy to sponsor this next segment to the Fifth Dimension out there. But sometimes David is oftentimes in the Sixth Dimension. He's a forward thinker out there. In any event, so what do we want to look at next? You know what? We can go take a look at those horizontal trading range levels here for the monthly chart for the S&P 500. You're going to see in 2015, I hate to be a broken record, but it's the only record that I can play at the moment out here. And you can see that the consolidation level, and I don't know how this works. I don't know if this is going to work out here, but it does look like that's the deal, which is we're in the same type of consolidation at the present time that we were back in 2015. And that can be very frustrating to traders, and especially with these wide-ranging days, these average true ranges that we have, 523 points or so inside of the Dow. Yes, but in any event, you can see that price inside the S&P 500 at the moment is holding its horizontal trading range level of 2630, and if it can stay above that, well, there is a reason to believe that the S&P 500 will make its way up to the next horizontal trading range area, which is 2849. It is possible. It has the way these consolidations work. If you can't bust out the bottom, in this case here, it does not appear to be able to do that. Well, then you go ahead and at least make a run for the midpoint, if not the midpoint, all the way up to the upper portion of that consolidating pattern out there. So it's a common theme as we speak on April the 10th at 1:30 in the afternoon. If we take a look at the Russell 2000, I'm not going to show you its horizontal trading ranges, not because I don't want to, just because there's something better. And this way we don't have to play that same old record. In this case, though, what we've done on this chart here for the monthly time frame for the Russell 2000 is we've gone ahead and changed it to a logarithmic scale. That's a big word out there. Many of you can do that with your charting package at home, and if you do, you'll get the same result. And that result says we're going to go ahead and take a look at the high from back in 2000, then we're going to take a look at the high back in 2007, and we're just going to connect those dots and draw our line. And what that says is that the Russell 2000 probably doesn't have the same pattern that the Dow, the S&P, and the NASDAQ 100 has. Now, that's kind of interesting because in 2015, and let's go ahead and take this off of the logarithmic, not your rhythmic. Your rhythmic, we would go ahead and play, what's her name out there? Such a great voice. But we'll come back to that. But back in 2015, it was a bit more than a consolidation inside the Russell. It was, in fact, it was a Annie Lennox. Thank you. There you go. What a great voice she's got out there. But let me show you this pattern. Let me show you this monthly chart out here, just to put things in perspective. And we got a call yesterday from Ron in Denver, and he was long the IWM and asked, and he had some calls and was thinking, what should we do? And we saw that it was moving into the swing point with light volume. We said, hey, take your profits out there. At the end of the day, that turned out to be the right decision for that day, that being yesterday. But it actually, by the end of the trading session, was pushing higher into that swing point with volume out there. And hence, we see that price inside the IWM was pushing back up there. It made me want to go investigate further the longer-term pattern inside the Russell 2000. Now, there was not a consolidating pattern back in 2015. Instead, what there was either a butterfly buy, and that looked like this. I'll go ahead and draw that pattern in. By the way, it formed the topping pattern that the NDX has right now. We do not have that at the present time inside the current Russell 2000 for any time frame out here. But there's your look at your butterfly buy pattern. That was confirmed when that nice little morning star candle formed. That was the month of, let's go give you the right month. That looks like March Yeah, give me a second here. That would be March of 2016. Now, that was also a Gartley buy pattern. That Gartley buy pattern looked like this if we go ahead and draw this in here. So you had two beautiful patterns out here, each being confirmed with a nice bullish reversal signal. And then those, as you and I know, can turn into A to B equals CD patterns to the upside. So let's actually go, let me see if I can add this in there. There we go. Let's go ahead and draw that pattern in here, because longer term, this is what the Russell 2000 is doing. It's doing that at least 1-to-1 A to B equals CD to the upside. That gives you 1637 as its price target. It got up pretty close to that. But is that really where the Russell 2000 is going long term? The answer is absolutely, positively no, or not. It's really headed to 1826 and beyond. Yeah, 1826, no reason why it can't get up to 2066. Now, look, it's not going to do the heavy lifting. It can't do the heavy lifting out here. But, Ron, I would say to you, maybe continue looking inside that Russell 2000 area out here, because it appears to me to be stronger than the other indices. Maybe this one is not going to do that consolidation pattern out here. Just maybe. But if we go take a look at it, as long as Russell 2000, I would suggest to you that if the Russell 2000 can hold this trend line using the logarithmic scale out here, and that would be priced at about 1423 would be the number out here, around 1423 to 1420-ish as we speak. As long as price stays above this level, and we've been above this level ever since November of 2016, there's been no breakdown inside the Russell 2000, and that has to make you say, something to think about. Let's go take a look at a few of the other usual suspects out here, those being what's going on with Goldilocks. And gold here trying to make its way up into the 1362 level, doing it awfully quietly. If we take a look at the 60-minute and 240-minute time frame market profiles, we'll see they're mean and green. That means they're above the top of their box out here. Therefore, they're giving the signal to all the daily traders out there, hey, why don't you take it up to the top of the box? Why don't you step it up a notch and take it up another about 20 buckaroonies or so, get it up into that 1360 and change level? It looks like that's what it wants to do. Now, we won't know if that's the case until price can try to get above the April 4th high. That's the real stinker as we speak right now. Can price get over there, or are we just simply going to have a third lower high out here? I don't know the answer. The 60-minute and the 240-minute charts, though, they're trying to do all that they can do to get all those gold traders in U.S. dollars to get up into that 1362 level. You just need to see it close above 1352.50. And if that's the case, is that a breakout session inside of gold? The answer there is, of course, no. Not until you and I see gold get above 1107.70. Gold priced in euros. Are the bulls going to party like it's 2018? Steve Rhodes, TFNN. Right.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 414, S&P 41. I was wrong. Let's correct my error out there. The average true range inside the Dow over the last 10 days has been 523 points. And I said earlier that I don't think it hit it. I was right about that. It actually exceeded it. So far from yesterday's close to today's high, it's a little dyslexic. 532 points is what we've seen versus 523 out there. So what does that mean? Is it in for the day, the high? I don't know. That much I'm not saying. I'm just saying what all we've seen right now is really an average day out here. But it's more than average because we are seeing certain levels get hit. And if they can get over those levels, then that'll send an important message to you, at least an important message to me. So let's go take a look at what do we want to take a look at? Why don't we just take a look at what's going on in volume land out here just to get a better picture. Let's go take a look at the IWM. Let's do that for Ron. So we were talking yesterday with Ron, and at the stage when he came on, we were looking at the trading session of April the 5th, had 17 million shares. And this was yesterday. We saw the price had moved up in there, but it was on lighter volume. Volume came in at the end of the day because it was actually 18.9 million shares. So when you push into a swing point with volume, and that was a swing point, a little junior swing point, says you'll be back up there. That's what we're seeing today. Now, as we speak right now, you've got volume of 11.7 million. So let's go see what today's volume is doing out here. We'll just do the straight line abacus math. 11.7 says that today you're doing 19 million. So with regard to the IWM is taking on its swing point. Could actually set up an A to B equals CD to the upside. A little one out here if it can actually close above that high from the trading day of April the 5th out there. That would go ahead and give you a 1-to-1 price projection of about 155.58, maybe 157.33 out there. So today, unlike yesterday, we can say that the Russell 2000 is pushing into that swing point with volume out there. And if it can get above that, close above that, well, that would be short-term bullish. If we go take a look at the SPY out here, let's go see what the SPY is doing. And you've got volume as we speak right now of 63.1 1 million. That would give us an end-of-day reading of about 102. So as it pushes into the April 5th swing point, it is doing it with volume. Yesterday's push was 105, today 102. So it keeps pushing into that level with some volume. Granted, there were a bunch of sellers out here on March 27th, and that's really a level where price would need to get over 266.77. But we can see we've got the fight between the bulls and the bears going on inside of the ETFs out here. If we take a look at the Dow Diamonds, so far today, volume of 3.9 million shares. What's that equate to? About 6.3 million shares. I'm glad you asked. Now, that's really pushing into the April 5th swing point with volume that only has 4.7 million shares. So that has not been tested. Any close above 243.38, you're 243.40. 2 pennies above that, but any close above 243.48 really suggests at least a test of the high, 246.09. That's how you could read it, and I would say you should read it. If we take a look and finish this off by take a look at the Q series ETF out here, you've got 30.1 million share, about 48 million shares, and that swing point from April 5th was 43. So, and yesterday was 41. So gaining a bit of strength. Any close above 159.48, and your trade right now 160.19 suggests at least a test of that swing point high, if not, in fact, taking it out, 161.58. So that is what the volumes are saying inside of the equity ETFs out here. Let's take a look at the top three. I imagine they're going to say the same. The XLK, the technology sector, which does have that island top out there. You can clearly see that. Price is pushing into its swing point from April 5th. That had 16.3 million shares, and it looks like it's going to end the day with about, what did I say, lighter volume. If I get this right, yeah. So the XLK is pushing in with about 12.6 million end-of-day shares out there. Nonetheless, if you close above 65.22, no reason to not go test the high. That's the XLK. XLV is number 2 or 3 out here. That's the healthcare sector. She's putting in 4.6 as we speak right now, volume-wise. That says about 7.5 out here. So what is it doing? It's pushing into that swing point with just slightly less volume than the April 5th level of 8 million shares. So where is all the volume coming from? Is it the financial sector? I don't know. But that would be number 2 or number 3 out here. And that's done volume so far today of 44.7 million shares. So roughly 72 million shares out there are going to be pushed. Oh, that is where it's coming from. So the financial sector, you little devil you, it's pushing into that swing point, which only has 45 million shares. The downdraft, the big downdraft inside the financial sector had 85 million, and you're pushing into a 72. Now, that is really interesting. I'd say that if you take a look at the actual February 9th level, that's really the key. So let's say that the healthcare, the financial sector inside the S&P 500 so far, volume-wise, is the one that looks strongest. The key level for it to overtake is going to be that candle session from February the 6th or 9th. Which one was it? It was the 9th. Out there, a close above 27.89. Number one, you could be pushing higher with volume. I don't know that this is going to happen today, but let's go through one process. Well, first you're pushing into a swing point with volume. That swing being that trading session for April 5th. Even if a rejection today says it's going to be back up there. So that much we can conclude. Secondly, if you close above 27.89, whether it's today, tomorrow, or what have you, you're going to be rejecting that swing point with lighter volume out there. You know, testing that swing point with light volume, which in essence is what it's been doing here for the past couple of weeks. And that's what's going on inside of the financial sector. I'll check to see if anybody sent in any emails, because we only got about another minute or so in this, and then 2 minutes at the end. It's been a very quiet day out there. Maybe everybody has got their spectacles on. They're going to go ahead and watch Hoodie go ahead and testify before Congress. But you have to be a Facebook user to really even be interested in that, and I am not, so therefore I won't, but I am interested, obviously, because hey, it's in Facebook. It's important, most certainly, and certainly an important stock. And we might as well go take a look at it, see what in the heck it's trying to do today. It's trying to take out a recent high. What could you use for a swing point out here? It'd really be March 29th, 59 million shares here at 26.7 as we speak, and 26.7. What does that do for you or I? 26.7 million shares, 26.7 says a day of about 43 million shares out here. Facebook put in a bottom. There's no doubt about that when it formed that hammer candle. That's been tested. It's been rejected, so to speak, with lighter volume on March the 26th out here. So sounds to me like everybody is going to love what Mr. Zuckerberg has to say. That is something to think about. Steve Rhodes with TFNN. Dow's up 359. S&P's up 36. It's just your average day. 523 points inside the Dow, and it's done 532 points already. You ready?
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Let's just kind of summarize where we're at in this last couple of minutes here to pull it all together. Let's start off this time here with the ES Mini. As we take a look at it, it's trading above 26.29.63. That is important out there. As long as it closes above that 26.29, that is short-term bullish for the ES Mini. 240-minute chart still has a positive market breadth, so that says it wants some higher price. Where is higher price? If we take a look at the profiles out here, for the 30 minutes says 26.60. The 240-minute says 26.72. Those would be the numbers to pay attention to. If we take a look at the advanced decline data for the New York Stock Exchange, NASDAQ Composite, Dow, all above zero. Those are saying that buyers are in control. Spot volatility index is saying not so fast, but at this stage here, I don't know who's going to win that battle. I think it's all about the NQs and the NDX inside the NQs out here. As long as price closes over 65.79, that's something it has not done since the early part of, well, I'll give you the exact date, since March the 15th, the middle of March. So, and it's close to the middle of April. So that is suggesting that a change in trend is underway. Now, that's an end-of-day deal out here. It's not a 155, you know, in the afternoon, what's it doing? It's really going to be an end of day. Many of you might say, well, you know, Steve, I don't trade the NQ, so you know, it doesn't help me a whole lot. Well, then let me help you. Let me help you by going and take a look at the NDX 100. And there, the number is 65.63. And a little bit of change out there. If you see the NDX 100 close above 65.63, well, it hasn't closed above Stevie's red line as well since March 15th. You got that 3 drive to a bottom pattern out here. That says, hey, maybe we're going to go up to Gilligan's Island top, back to its all-time highs. It opens up that possibility. Folks, stay tuned. David White, your favorite polar bear, I believe he is going to be taking it up and away from here. Have a great Tuesday. I'll see you on Wonderful Wednesday. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.